$250 billion for a company that barely existed 3 years ago.
It's Elon buying Elon's company with Elon's equity, the ultimate corporate shell game. But you can't ignore the broader momentum. 12 mega deals over $10 billion this quarter.
I can and I will. They're counting massive minority stakes as buyouts just to pad the stats. That $1.2 trillion Q1 record is a total mirage.
My recovering banker brain just sees the massive advisory fees, but fine, let's look at the actual term sheet. The rundown. 12 mega deals over $10 billion in a single quarter. We haven't seen that kind of volume since 2008, huh?
And we all know how 2008 ended.
Oh, come on, let me have this. The market is finally ignoring the geopolitical noise. Strategic planning is back on the menu.
European strategic planning is back. North American and Asian acquirers are still sweating. Look at the performance data, Nate. Europe actually carried the quarter.
Fair, but we still saw plenty of action everywhere else. Let's hit the rundown. QXO just finalized the Kodiak Building Partners deal. $2.25 billion.
Solid roll-up play. But the one that actually caught my eye in the filings today was Klarna. Värde Partners just led a massive $1.7 billion significant risk transfer with them.
A risk transfer on buy now, pay later debt. They're just moving the deck chairs on the Titanic, Maya.
No, it's not moving deck chairs. That's actually a brilliant structure. Offloading $1.7 billion in synthetic risk. It completely changes Klarna's capital requirements. You ex-bankers just hate it when private credit does your job better than you do.
Ouch. Okay, maybe I have a little fee envy. Still, that much consumer credit risk makes my eye twitch.
You'll survive. What else is on the board?
Antin Infrastructure Partners took Sapphire Gas Solutions off Apollo's hands. Classic sponsor-to-sponsor handoff.
And a fun cross-border tech play. Colombian fintech Tipaga bought Mimoid.
Wait, Mimoid?
It's a Spanish payment gateway. Tipaga is clearly trying to own the entire payments processing infrastructure. You don't just want the consumer app, you want the pipes.
Buying the pipes is always smart. But look, all these deals, the roll-ups, the risk transfers, they're completely skewing the volume metrics for Q1.
How so?
Because traditional M&A is getting buried under these massive equity plays. Companies are panic buying tech capabilities before valuations get completely detached from reality.
Oh, I think we're already detached from reality. Q1 global deal value just crossed $1.2 trillion. And if you want proof that this quarter broke the scale, we need to talk about the $250 billion elephant in the room.
$250 billion. I still can't even say that number out loud without my brain short-circuiting. SpaceX really just bought xAI, the big one. $250 billion. I keep saying it out loud and it still sounds completely made up.
Because it basically is, Nate. It's $250 billion for a company that barely existed 3 years ago.
You can be cynical all you want, but this is the ultimate vertical integration play. SpaceX needs autonomous systems, they need massive compute for Starlink, and xAI needs capital and infrastructure. It's a match made in heaven, or low Earth orbit.
It's a match made in a family office. Let's be real here. He's essentially buying his own company with his other company's equity. I spent all morning reading the footnotes on this structure, and the valuation metrics are entirely circular.
Oh, come on. You're acting like they just picked a number out of a hat.
I think they picked a number out of a very expensive hat. Look at the broader market context. We just capped off Q1 of 2026. Global M&A hit $1.2 trillion, 12 deals over $10 billion. We haven't seen mega deal volume like this since 2008.
Exactly my point. The market is rewarding scale right now. Everyone is trying to secure AI capabilities before valuations detach completely from reality. Look at the massive equity stakes we're seeing across the board. It's totally blurring the lines of traditional M&A and skewing the volume metrics, but it proves the demand is real.
It proves voices.
So the analysts are out this morning calling Q1 a historic return to form. 12 mega deals over $10 billion. They are literally comparing this to 2008.
Which is exactly why I am pulling my hair out reading these reports. They are looking at that $1.2 trillion total and completely ignoring how the sausage is made.
The sausage being made of pure, unadulterated artificial intelligence?
The sausage being massive equity stakes masquerading as traditional M&A. Market chatter is totally right on this one. When SpaceX buys xAI for $250 billion, that completely skews the volume metrics. It is an AI land grab, not a traditional buyout.
I have to push back there. A buyout is a buyout. If you swallow a company whole, who cares if the structure looks a little funky? The industry observers have a point here. Companies are ignoring geopolitical uncertainty because if you do not buy the AI capability now, you are obsolete. It is strategic survival.
Oh, please. You sound like a pitch deck. Integral to long-term strategic planning. I read that exact phrase in 3 different analyst notes today. It is pure copium for overpaying.
Hey, I resent that. I used to write those pitch decks, but look at who is actually executing. Europe is absolutely eating North America and Asia's lunch right now.
That actually surprised me. European buyers led the entire market in Q1. You do not usually see North American acquirers sweating like this over deal volume.
They are definitely feeling the heat. Which brings up an interesting pivot, because while everyone is distracted by $250 billion shiny objects, there is a quiet roll-up happening in cybersecurity.
Exactly. Keep your eyes on Harbor IT and these managed service providers. Compliance-driven M&A is where the actual cash is moving tomorrow. Spill the tea. I'm just saying, you can't call a massive equity stake a merger. It is venture capital wearing a trench coat.
Oh, come on. If you buy 49% of an AI firm and integrate their entire tech stack into your product, you bought the company. You just left the founders with enough equity to keep them from fleeing to a meditation retreat in Bali.
No, you bought a minority stake, but the bankers are rolling these into the global M&A volume to make their league tables look good. Look at the Q1 numbers. Over $1.2 trillion globally. 12 mega deals over $10 billion, the highest since 2008.
And you think that's just padded data?
I think the lines are completely blurred. Half of this trillion-dollar AI boom is just tech giants throwing billions at compute credits and calling it strategic alignment.
Okay, skeptic, but you can't deny the actual completed buyouts. SpaceX swallowing xAI for $250 billion is not a venture check. That is the definition of a mega deal.
Sure, the SpaceX deal is real. But look at who is actually closing the traditional deals. The real gossip right now is North American and Asia Pacific acquirers absolutely sweating.
Because the Europeans are eating their lunch?
Exactly. European acquirers completely led the market in Q1, which honestly is wild to me. Are they working through August now? What happened to the 4-day work week?
Geopolitical uncertainty is a hell of a motivator. European boards are looking at the map and deciding they need scale yesterday. Meanwhile, North American buyers are too busy trying to figure out how to structure their own fake AI acquisitions before valuations get even dumber.
Which is exactly what we're going to see next. Traditional non-tech companies panicking and buying massive equity stakes in AI capabilities they barely understand.
Oh, the FOMO is real. But if you want to see where the actual smart money is quietly moving, while everyone else is distracted by the AI shiny object, we need to talk about what managed service providers are doing in cybersecurity right now. Harbor IT is making some compliance moves that nobody is paying attention to. Tomorrow's radar. 12 mega deals over $10 billion in Q1, best quarter since 2008. Tell me that momentum doesn't roll right into tomorrow morning.
It absolutely doesn't. Those volume metrics are totally skewed.
Oh, come on. $1 trillion quarter is $1 trillion quarter.
Half of that is just traditional companies panic buying massive equity stakes in AI startups so they don't look obsolete. It's completely blurring the line of what even counts as M&A anymore.
Hey, a $250 billion SpaceX and xAI tie-up pays the same advisory fees whether you call it a buyout or a panic purchase. Bankers gotta eat, Maya.
You are incorrigible.
I'm a realist. What are you actually watching tomorrow then, if not the AI gold rush?
The boring stuff. Managed service providers like Harbor IT aggressively pursuing compliance-focused roll-ups. Geopolitics are a mess right now, but regulatory compliance, that is a guaranteed revenue stream.
So I'm watching trillion-dollar AI hype and you're watching IT audits.
Someone has to read the footnotes, Nate. See you tomorrow.